Καλημέρα σας. Θα ήθελαμε να σας ευχαριστήσουμε για την ωραία και θέρμη υποδοχή σας. Επιτρέψτε μου να σας στήσω τους members of the panel. On my left I have Vassilis Maroulis of Citibank, Mr. Berend Paasman of DNB Greek office, Dimitrios Panagopoulos, Managing Director, Regional Head of DVB Bank SE, and finally, but not least, Nieswandt of HSH Nordbank. Now, during the morning session, we had a variety of topics, and the text I would take from this morning's remarks was of Mike Kirk of RMK Capital, talking about ship owners being smart, which of course they are. As we heard at lunchtime, they wouldn't have had the successes that they have had without that smartness. And today, this afternoon, we're going to talk about another set of smart people, namely bankers. And the expression I have just read recently in the press, which is quite apt, I think, to describe the current trend in ship finance, is what's called smart capital. And I wonder if we on the panel today can develop that. What I've done with the panelists is pre-prepare them with some questions, with some issues, which I think are relevant to the current state of shipping, and in particular Greek shipping. And just starting from each of the panelists from left to right, briefly, I'd just like to ask you, just generally, as we currently are and looking at the market as it stands, what is your current strategy, your bank's strategy, in terms of asset classes, target clients, financing structures, etc., bearing in mind capital adequacy ratios, so-called Basel IV, upcoming requirements, etc. So, Vassilis.
Thank you. I think, and I can only speak on behalf of Citibank, we as a matter of principle, we finance in a slightly different way to many of our competitors, and that differential is the following. We are not asset financiers. We are corporate financiers, which also have, as part of our financings, which take collateral, which in this occasion, it's specific asset classes on the shipping side. So as long as the corporate, which we analyze, the actual holding entity that consolidates the corresponding fleet, is of the requirements that we want. So therefore, you know, the appropriate leverage, the cash flow generation, the backlog in terms of future earnings, or if ultimately a fleet is operating solely on the spot side, appropriate leverage to be able to sustain that, then capital allocation can be provided, and it's irrelevant of the asset class. So what drives the sort of the fundamentals behind every asset class, whether it's dry or tanker, LNG, container, LPG, which we are active across the board, is ultimately the LTV. So if it's a spot fleet, the LTV is slightly different to what it would be if you had long-term employment to an oil major or, you know, a cargo owner that is of a very solid credit rating. And I think with regards to sort of the Basel IV impact to pricing, which I think, you know, indeed the rumors are what they are, and it could have a material impact for most of the banks, especially the European lenders, given that Basel IV does not provide the necessary capital relief for the associated collateral.
Thank you.
Thank you. That's interesting, Vassilis. Actually, the expression smart capital came from your colleague, Michael Parker, so I don't have any apologies for inventing it. So on to Berend. What's your views?
Thank you. Yeah, our key focus will be on our kind of existing core clients here in the Greek market. We'll selectively look at maybe a couple of new names. I kind of echo what Vassilis said, like in terms of what we are looking for. We're looking for, in the first place, we're looking for solid counterparties with solid principles behind them, or have the ability and the willingness to support companies through the downturn. And the specific asset class, whether it's a dry bulk tanker or a dry bulk or a tanker, is less important than who the counterparty is. When it comes to Basel IV and new capital requirements, I think that DNB has been pushed by the Norwegian regulator to be a little bit in front of the curve. So we have gone through an exercise in the last couple of years to build more equity, and we're probably one of the highest capitalized banks in Europe at the moment. What comes out of that is that profitability is becoming far more important for us. So we will be more steered on doing profitable deals, unless we won't have a mandate like go out and lend 2 or 3 billion in the market. It will be find the profitable deals. And that's a shift, and I think that more banks will move into that direction in the coming years.
Well, from my part, DVB is a global transportation lender, so we have expertise in the sector. Almost 40% of our portfolio is shipping. So we do a variety of asset classes. We can look at tankers, LNG, dry bulkers, container ships, any asset class that the Greek market is involved with. We also have a wide range of clients, so we don't only concentrate on corporate clients, of course, but we can do traditional Greek structures, lending with management company guarantees. We can finance private equity if a Greek client is involved, of course. We finance leasing companies, so we're involved in a wide range of clients, and for us what matters is the structure. So we can consider anything, but the structure and the financing terms will be tailor-made for that particular product. I think coming to Basel IV or regulatory environment, I think Basel IV for us, it's a bit further away. It has been pushed forward and watered down, I believe, a bit. But I think what matters for the regulators is that they are scrutinizing everything. And for us, what affects us is changes to our rating models, the way we look at things. So there has been some changes due to regulatory oversight and the way we look at things in the market recently.
There's not that much that I can add to what was said, however, and I read this article that was in TradeWinds of Michael Parker, that he said smart capital. What is smart capital? I have no clue. Be it banks investing in perfect companies or be it smart bankers, I have no clue. But I have an idea. Smart capital could be that capital that bank that learned the lessons from the past. I mean, that is very irrelevant these days for all of us here, because all the banks here on the panel today have had their lessons to learn, and this we did. We are still in the business. We do basically any type of asset available, not necessarily offshore these days, but apart from offshore, everything that is typical in maritime, seagoing, tonnage refinance. However, at a much more conservative, in a much more conservative way. By doing this, we have developed our portfolio over the years since 2011, since we have restarted the business. We have done in Greece a lot of business over the last years, and therefore I'm very often astonished when people ask me, are you still in business or are you back in business? It's a little bit astonishing. We do a lot. When it comes to the regulatory framework, the big problem is that all of ourselves here report to the European Central Bank, and the European Central Bank, in particular when it comes to the German shipping environment, they have kind of seen all the losses taken by many of the European ship financing banks, and that they have last year they have again adjusted the components when it comes to application of the rating, and this makes things very difficult. So as per now, as a general matter, we are still very interested in doing business because among all the other business lines in the bank, shipping is a very profitable but risky business. We prefer to do corporate-style transactions. However, we are still there to do the pure asset style. We are currently working on solutions because this rating element and the effect of the European Central Bank / the authorities, the banking authorities, only came up recently. So we have to work on this situation. We are eager to continue our business, in particular in Greece, because Greece is one of our most important markets in the world, and we would like to continue the Greek business. However, it can happen over the time that Greek shipping companies are well advised to look into corporate structures in the future, rather than to pursue permanently and always the pure asset structure.
Thank you all. Leading on from that, talking about the pure asset finance structure, again, this has echoes of Michael Kirk's talk this morning. Can we talk about, if we may, the potential consolidation of the current diffuse, and it's attractive because it is diffuse, state of the Greek shipping market, and if you see that there could be advantages to the consolidation of enterprises to be more, as you say, Christian, of a corporate affair. Is that a realistic prospect? And if it was, would that make it more attractive to a financier? Vassilis.
I think, look, there is a common misconception, which is, and that size of course is important, but at the same point in time, size does not always mean that it comes with quality, and it also does not mean that the creditworthiness of a company is driven by its size. Ultimately, us as shipping financiers, this is what we are looking for. We are looking for quality operators with sizable operations, and then you have every sub-segment within the shipping space is treated differently. Now, as on the tanker space, for example, the barriers to entry are becoming larger and larger, and therefore consolidation in the way potentially that Euronav is, as everyone knows, acquiring, generate, and what that will drive, and also on the LNG space where you are looking at very high operational barriers to entry, and therefore, scale makes sense. At the same point in time, there are other segments of the shipping space which, you can have a very decent, high-quality operation which is extremely creditworthy, and therefore capital can be allocated. So, on the one end, of course, size is important because you have the economies of scale, you have the ability to apply pressure to get better terms, not so much with regard to the charter rates, but in terms of your costs. But at the same point in time, I would not say that size is the number one factor when one takes into consideration and analyzes the creditworthiness of a corporate.
Yes. Berend, any thoughts on that?
Yeah, I agree, but at the same time, what we see in the market today is that, like many of the active banks, seem to be targeting kind of the same group of companies in the Greek market, and these are more the larger companies. And even, I mean, there's another panel about alternative sources of funds, but even the Chinese leasing houses seem to have a preference for the larger setups. What we're also seeing is that having a corporate structure is getting more and more important. Banks have, in many cases, a different capital treatment for a more traditional SPC structure than for a corporate structure. And sometimes it doesn't make sense because it can be a very good quality operator with a good owner who puts in equity in the difficult times, but still you're being treated different by the models. And from a compliance perspective as well, regulators and compliance departments have far more scrutiny on the traditional SPC model than on the more corporate structure. So those are two trends that we see in the market.
Yeah, I would say more or less the same things. Of course, we deal with small companies or startups or joint ventures. So, size is only one of the considerations, and you certainly adjust the terms in accordance with what your client is. I just want to point out one thing that I think, Berend, you just briefly touched upon. Because of the regulatory environment now, whether you have a $5 million loan or a $50 million loan or a client is the same thing. You have the same requirements, you have the same more or less things you have to go through, so economies of scale play a role here. And I think consolidation has taken place, if we see numbers, courtesy Petrofin, not only through M&A, of course, but I think big companies have become bigger and maybe smaller players have gone out of business. I think we see a more concentration. The average number of vessels has increased the last 3-4 years. So this is a factor.
Yeah, from my side, when it comes to consolidation, first of all, I cannot state that we had better or worse experience with smaller or larger companies. There's not a clear correlation from my perspective. So in particular here in Greece, that we have a lot of companies, mid-sized companies with a fleet of, let's say, 4 to 8 to 10 ships, we have made very good experience. When it comes to the banking side and consolidation, first of all, don't forget that the quality of a banking portfolio is characterized by the level of granularity or by diversification. So it's, in particular in shipping, which is an extremely volatile business, it makes a lot of sense to have a very granular portfolio, which would speak for smaller entities. The other element is scale, as you said, scale on the side of the bank as well. If you look into this, if you see banks nowadays, the traditional banks nowadays, and the banking industry, it's all about cost saving. So when it comes to that, yes, it would be positive to cope with, let's say, transactions 50 million upwards instead of 8, 9, 10 million. But again, this is again then at the expense of the granularity of the portfolio. However, I think still shipping, which the world of shipping starts in our understanding with a transaction of, let's say, $10 million, and in light of what you can earn with the company, in light of the volatility, it needs anyway, it's value to have a transaction of 10 million in your books. So from that side, I would say I would go for the granularity, although I'm fully aware of the costs behind smaller transactions. When it comes to the market, coming from Germany in particular, we have seen a tremendous consolidation. We have seen the necessary consolidation with the liner companies. We are about to see a tremendous consolidation when it comes to the German management companies. We've just recently learned that Arcadis has sold his ship management entity to a Bremen-based group, Seaborn. So there we have a tremendous consolidation in order to save costs, in particular in a nice high salary country like Germany. There's another element that will definitely be or will drive the consolidation apart from the cost element, and that is the market balance, because we have seen that on the container side where hundreds of very fragmented ship owners in the container industry had to negotiate with nowadays 10+ liner companies. So from that perspective, there has to be a consolidation to balance the forces and the power on both sides, supply and demand. The same, I think, I've heard that the same will definitely happen in the bike sector, because in the bike sector, if you look at the strong charterers in the world, the final users, the Rio Tinto and the likes, nowadays they are basically negotiating their terms with hundreds of small ship owners. So from that perspective, I think it is advisable to consider consolidation on the side of the ship owners in Greece. And last but not least, if I consider the tremendous environmental regulatory necessities that we face nowadays, it's unbelievable. And I ask myself every day how a shipping company with just 4 ships can manage all these requirements and comply with all the requirements when it comes to that. So from that perspective, I think, and we are very well behind that the market, even the dry bulk market, because the Greek market is very much characterized by the dry bulk market, will see a consolidation as well.
Thank you very much, all of you, for those very clear answers. Just taking up your point, Berend, which leads us on to the alternative sources of capital point. You mentioned Chinese leasing companies. Obviously, we've got private equity companies coming in. And indeed, there are no doubt several companies in this room, representatives of, whose companies have benefited from the injection of outside capital and friendly and profitable partnership arrangements with such providers. However, we have here on my left, we have here representatives of 4 of the world's most enduring commercial banks financing shipping. And I'd like to ask you all now, do you see such alternative sources of provision of capital in any way impinging on your roles in the future? Vassilis.
I mean, from our end, and this is an absolutely honest view, we don't see them as competition. There are transactions that they are pursuing, which potentially we would consider also, but at the same point in time, under no circumstance do I perceive Citibank to be competing against the Chinese leasing houses or any leasing house for that matter. We see them as entities which are there. They are filling a void that has been caused by the retraction of quite a few of the traditional shipping financiers. There are quite a few institutions, who are not the ones that are here present in the panel, but quite a few that are no longer there to provide any sort of capital. That has created a void, especially in the Greek shipping market, and therefore I welcome their involvement, their participation, the capital that they're providing. Now, I need to sort of state that, you know, it is indeed the case that these, the leasing houses can provide extreme amounts of leverage and quite high pricing. Those structures need to be very carefully considered and hopefully serviced so that this capital is indeed here to stay, rather than for them to realize that there are back-to-back defaults and they retract also. So in my view, I sincerely welcome the capital that they provide, and as I said, we don't consider them as competition.
Berend.
I completely agree with Vassilis. We also see them as complementary, with like some specific exceptions. They seem to be kind of targeting other risk-return parts of the spectrum. And we see them actually as quite useful for our clients as well. If they want to sell a ship after older ships, that kind of smaller ship owners have access to financing to be able to buy these ships. So they help our clients as well. And we see it as a business opportunity. On the investment banking side, we have been helping our clients arranging these types of leasing structures and also helping place private debt placements or bonds with these alternative sources of financing.
Yes, I can only agree as well. It's mostly complementary for us as well. It's very rare that we cross lines sometimes. And I think you said it all. I think the need for high leverage is what drives that. I mean, you mentioned smart capital. For us, smart capital is borrowing senior debt up to 60%, maybe, unless there's long-term employment or a very strong corporate. So there's a gap between the 60 and the 80, or if you want more, it's equity, then you go to private equity. So I think this is what's driving this, and again, it's complementary for us as well. We work with clients.
Yeah, when it comes to alternative finance, and apart from just Chinese, all the other means like IPO and bond business, I remember very well when I did my traineeship with Deutsche Bank and in the credit department, and there was always one question when we evaluated the credit worthiness of a company, and one question was, what type of alternative funding channels has the respective company? Apart from just working with Deutsche Bank, what other banks do they have? What other access, for example, capital market they have? So all in all, when you look at the funding or financing scheme of a company, it's from my perspective, it's more a sign of strength that they have access to all these means, which again says that what we were discussing beforehand, what means consolidation, because by having consolidation, you may qualify for the capital market. So all in all, alternative financing is very interesting, even from the bank's perspective, whenever they evaluate the quality of a company. When it comes to Chinese lease, we discussed yesterday already about that. It's the question who might benefit from that. Yes, it's there. It's an alternative. However, it comes along with high leverage. And the question is, after all the things that was said here, whether high leverage is good or bad. Because high leverage is something that we would not do. And I'm fair enough and convinced enough after all the experience that we have made over many, many years of financing, ship financing. There's one thing that we have not forgotten, that shipping is an extremely volatile business. And there's one particular element when it comes to the quality of the financing, and that is the leverage, the loan to value. And by doing a Chinese leasing structure, the same ship owner decides to go into a highly leveraged situation. Whether that is advisable or not is a question. Yes, he can do more projects. He can do 4 instead of 2 projects because the inserted equity is lower from his side. But he is in an extremely highly leveraged situation. Plus, do not forget, the ship financing via a leasing structure will not lead to ownership. He is not the owner of the ship, but he is, as a lessor, he's using the ship with all the rules behind that. But it's there. It's not a fierce competitor of the banks. Here I can agree with my colleagues.
Thank you. Going on to a completely different topic now, environmental matters, sustainable shipping, which is the current buzzword. As many of you know, effective 1st January 2019 is coming into effect the ship recycling regulation in Europe, which will mean that from that date, EU flag vessels can only be sold for scrap, for recycling, to an approved recycling facility, which will take out for many owners of such vessels the options currently available of sending the vessel to the Indian subcontinent. Now, I have noticed in recent months that bank term sheets are including an obligation on the part of ship owner borrowers to observe the provisions of the ship recycling regulation. We've also seen recently, you may have read in Tradewinds, the statement of the Norwegian State Pension Fund actually naming companies with whom it will not deal because they do not, in their view, observe green recycling policies. Now, I'd just like to take your views, panel members, on how you, as institutions in the public eye and with stakeholders and with NGOs looking at your behavior, how do you, in your way, deal with such issues? Berend, how about you?
Yeah, now for us, it's becoming very important. As you say, many of our stakeholders are actually requiring us to put kind of these CSR issues kind of high up in the agenda, not only our shareholders, but also our employees and deposit holders. I mean, it would be, I think, a major public relations disaster for the bank if we finance a ship, it goes to a scrapyard in Southeast Asia where they don't have very high safety standards. An accident happens with fatalities, and it's over in the front page of the newspapers the next day, implying that we are, the DNB is sustaining these practices. So we kind of we signed up to a group of banks have like set up this sustainable ship recycling standards. It's a couple of Dutch banks, Scandinavian banks, and other banks are looking to join that as well. That will have, as you say, we will be asking our clients in term sheets for certain stipulations like green passporting, and we will ask the owners to put more emphasis on sustainable scrapping. So it's not something that will go away.
Regulations are one thing. Regulations that are being, are required by governing bodies, whether it is the EU, the US, or whatever else, the IMO. That's one story, and of course we require our clients and the clients that we provide capital to be in full compliance of all the relevant regulations. Now, to go to the, as Vassilis, and also I think for the time being Citibank, do not want to go to the other extreme where we begin to influence how our clients do business and the commercial decisions or operational decisions that they have to make. So on the one end, I think all of these new requirements are extremely important, and new initiatives and new points of view, and how that makes you more attractive for either different banks or different investors or different pockets of capital. But at the same point in time, for the time being, we require our clients to be in full compliance of all the relevant regulations, but to go over and above that is, I think, a step too far, at least for the time being.
Interesting.
I know DVB is also part of these initiatives. Apart from being politically correct, we do, want to support our clients to think green and try to introduce measures. Of course, the loan agreement also provides for security, other clauses that any new regulation is adopted. I think that's all we can say from us.
I mean, it is the scrapping element in the shipping environment is a thing that everybody knows about, the risks that that are faced with scrapping at beaches. And if I look at the extremely high security standards that are applied to running a ship, it is a little bit not understandable that when it comes to the scrapping, obviously other standards are applied. And from that perspective, for us as bankers as well as for our customers, it must be a natural and logical step to look at that element as well. And therefore, we as a bank are considering to pursue the same approach like my colleagues here from DNB and DVB, to apply particular clauses and to have a serious discussion with our customers. What is their plan when it comes to scrapping? Although I know that a ship has a lifetime of 25 years or even longer, and if we do a financing nowadays, I mean, this might be the same with you guys. We like to have ships younger than 12 years. So even if we take a 12-year-old vessel, there's a high likelihood that the ship will be sold and traded in the third party's hands afterwards. So the influence is very indirect of what might happen at the end of the lifetime of a ship. But yes, we apply to this policy as well.
Thank you very much. Christian, actually, while you're on, obviously HSH Nordbank has been in the news. Can you just tell us what the developments are with the planned privatization process?
Yeah, after many years that we have been in the press, and unfortunately not always with brilliant news, the things have changed now. The bank has to be, our owners have to sell the bank, our owners being the federal state of Schleswig-Holstein and the free and Hanseatic state of Hamburg. They run the process, we support them by that, and the bank has to be sold, and the bank will most likely be sold by end of this month. We expect the signing. And for the people reading the newspaper, they might know even more than we do. There's a high likelihood that we will become an American bank afterwards. That sounds at first glance a little bit kind of interesting. However, this is a process which has been prepared for a while. The positive thing is that the expected price is much better than expected at the very beginning of the process. At the very beginning of the process, it was said that it needs at least €1. The price must be at least €1, and the figures that I have read in the press are much higher than the €1 for the bank. This privatization will give the former Landesbank an entirely new face. And with the new shareholders on board, we expect enormous chances to do new things and to develop new things to do. However, when it comes to our business model, we expect this will more or less be continued. Currently, we are active in shipping. I think we will continue shipping. However, as I said, at a more conservative level, we will continue all the other business fields as well. I expect that we will become more international in the future. I mean, on the shipping side, we are already a global operating bank, but when it comes to real estate or infrastructure, renewable energy, I think the bank will again operate more at an international base.
Is there a concept of a so-called good bank and a bad bank? In other words, are there portfolios that are not going with the sale?
No. As per now, the whole bank will be sold, i.e. the so-called core bank and the non-core bank. However, one should not forget that this element of non-core has been reduced tremendously. I mean, the main part of the non-core bank was the non-performing part of the portfolio, and this we have significantly reduced over 2017. End of 16, we had 13 billion in non-performing exposure in the bank, and by end of 2017 we stood at 6 billion only. By end of 2018 we expect this figure to stand at 2.8, which means basically that the whole discussion, what happens to the core bank and to the non-core bank, will more or less fade away over the time. I expect that it's not a big topic for us. However, at the end of the day, let's say beginning of 19, I expect we will look at the core bank, and the non-core bank is more or less gone.
Christian, that's very interesting insight from you. Thank you for that. We have 3 minutes left in our slot, and I'd like to say, anybody in the floor would like to ask some questions of our panel? Any views? I apologize, I'm not Tony Rice. He couldn't make it. So I'm here in Greece to replace him. Anyway, so it looks like there are no questions. You've been a very interesting and impressive panel. Oh, there is one, sorry.
I did want to ask about
okay.
the DVB bank, because of the press about the DB bank and how that's going.
There's nothing to say about that. It's all speculation.
Anybody else? Okay. Thank you very much. Ευχαριστούμε στο πληρώμα μας, our crew, and have a good afternoon. Thank you.